Hey, what's going on, guys? Welcome back to Way Up Trading. Today we're going to go over a review of the QQQ play we took today. Fantastic play. We're able to catch it on two directions, on the upward movement and the downward movement. Going to go over it step by step to show you how to break down the opportunity of entering plays like this, as well as finding and plotting your exits in a timely fashion so you can make the most out of the trade. Let's hop right into it. All right, we got the QQQs pulled up right now on the screen. Gonna go and take a look at some technical analysis on this thing. We're able to catch this move pretty nasty today and able to make a two-directional play on this one. Looking at some of the basics over the last 15-minute time frame over the last few days, including the after hours motion. I'm gonna go and pull up the indicators as well as the drawings for us. I actually started off by looking at the 15-minute time frame to get an idea of how things were moving. We went ahead and drew a Fibonacci retracement from the swing low, which is the bottom here, which is the bottom swing of the more recent trend. Drew a Fibonacci retracement here, traced it all the way to the swing high, which gave us our Fibonacci sequence. You can see we've been basically playing out a rising wedge pattern all the way since the date of May 4th, all the way up here. You can see the spreads on this entire thing as we move up has been getting smaller and smaller on a rising wedge on some decreasing volume. Now, we've been playing the top side of the wedge here for the last few days, ever since the run back up from the lows of yesterday's CPI data. Drove us all the way back up to the highs of about 326. It basically meandered a little bit back in the after hours as well as pre-market before coming back down after some of the data that came out today. I'm going to move over to the closer time frame so we can take a look at how we went and pull the Fibonacci sequence from the 5-minute time frame. After positioning our Fibonacci on the 15-minute time frame, we go ahead and do it again on the 5-minute time frame in order to get a clear indication of what the potential reversal is going to look like once we get our bounce. So we pull it from the swing high in pre-market to the swing low of the day's action, which brought us the 326.71 in pre-market, and we dragged all the way down to the low, which was 324.11, just above our 0.236 of the larger 15-minute Fibonacci retracement. Now you can see obviously we're above the 200 smooth moving average, which I like to use on all time frames, meaning that calls was still the play. We didn't break beneath it, meaning calls were still the play, and that was the opportunity to start to look into positions for our calls. I wound up taking a call here roughly around once I saw we caught support around the 324, which is the 236 Fibonacci, and was able to play this up from here all the way up to about the 707 before I started taking profits, trimming all the way up as I normally do, taking some risk off the table between the 10 percenters, 25 percenters, 40 percenters, 75 percenters, and 100 before I started to let the rest of them ride out as runners. In this pattern, you saw we started to form a rising wedge, which eventually ultimately broke down into a put situation. You can see we got a 921 cross here to the upside above the 382, and we continue to ride this 9 EMA all the way up before getting my 1348 cross as continuation confirmation. Played it all the way up until we reached the peak of this larger falling wedge that we talked about earlier on the 15-minute time frame. So we briefly broke through it, but were quickly rejected and knocked out of it, breaking through the 9 EMA, which is then when we switched to our put position for 325 puts. We had 326 0 DTE calls to the upside, and we had 325 puts for 1 DTE, tomorrow's expiration date, to the downside after we broke the 9 EMA. The 9 EMA wound up pushing us all the way downwards. We had a little bit of a pop because of the Amazon push-up that we had throughout the day, and basically came back down to test the lows of about 325, right on that 382 Fibonacci line, which was a quick reversal back to the upside in this case. Now, if you would have been able to snag these off of the both moves, both actually wound up doing really well for me. The tech sector has been doing excellent for the last couple of days. I mean, Google was on fire today, Amazon pretty much on fire. We also had a huge Tesla pop toward the end of the day because of the news that came out with Elon Musk looking to go and hire a new CEO for the Twitter side so he can focus more on the other businesses that he's running. So a lot of things are happening in the tech sector, so it's a very good time to pay attention to it. Oh, not to mention Apple still doing big things, was able to cross the 174 mark today. So QQQ is a lot stronger right now than, in my opinion, than the SPY. So pay attention to what's happening with QQQs. I think I'm going to be paying more attention to it in future videos to come, as well as taking opportunities on calls and puts when they come up. But this is a great opportunity to get on this play, just playing the basic Fibonacci's as well as our crosses between the 1348 cross, the 921 crosses, and just following the trend above the 200 EMA and the 200 smooth moving average, and putting this in play in order to get the best out of the moves. A lot of the times what we're looking for is confluence of a lot of different indicators to show us that a move is going to support the direction that we want to go. And we were able to basically put in place our entries and exits based upon the crosses that took place on the several indicators that we use. So for example, again, the 921 is a big one. 9 EMA and 21 EMA once they cross, you get this yellow dot that formulates here. The 1348 EMA cross, these are again all above the 200 moving average. The 1348 EMA cross took place here. We get this purple cross, which basically shows us that continuation should ensue, riding the 9 EMA all the way up until it breaks. So we played this all the way up until a point of resistance, which I already marked off as the top of the rising wedge that we had in place. So we took our positions and the money just started to flow in all the way up until our position had been reached on the call side. Once that position was broken, we then went ahead and played the short side, buying the puts for 325 after that position was broken all the way downwards until we started to make our profits on this move. Support was right back at where we started the original part of the day. So we're going to take a look at some indicators also to give you an idea of what those look like during the time of the move. Caught the MACD just underneath the signal line. You can see the MACD started to cross. This is the MACD on the first part here. The MACD crossed just as the 921 crossed here, as well as the RSI. We got the cross of the RSI above the signal line as well. Our other indicators, including our max momentum indicators, which is one that I like to use as well. It gives us an insight on when things are going to start to move to the upside and downside based on a setup with TTM squeeze, which just shows us that there's going to be a strength impulse to the upside or downside, depending on where this signal line actually crosses. So I added that to my repertoire of different indicators that I use, and it's a real big help. So if you want to add one, the max momentum indicator is one to add to the trading view accounts that actually help you with some of your plays. But you can see we also had a cross here on the max momentum, as well as a couple other indicators that I use, HSI and AMP RSI. Once we got our crosses all confirmed, we picked up our calls for 326, 0 DTE for the highest return on investment, but also the riskiest move. A safer move would have most likely been a move to 1 day expiration. But in this case, I had a great understanding of which way we were moving based upon what was happening with the rest of the tech sector. But again, safer is always better in these cases. But we entered the move here, rode the upside on the cross, got further confirmation on the 1348 cross above this Fibonacci line, added more to my position here, and just continued to ride up the 9 EMA until it broke. Closed my call position here, switched out, and watched the opposite move happen, where the signal line on the MACD crossed downward, as well as your RSI crossed downward, and your max momentum started to cross downward a little bit later on in the move. However, I entered my put position just after breaking the 9 EMA, which is up somewhere around the 326.15 mark, and then from there I entered my puts. There was a little bit of a bull trap that took place that almost shook me out, but once I saw the volume not matching the movement and just continued to push down, I think it was game on. Once the max momentum indicator showed the flip down, pretty much all my signals had actually hit before we wound up to the downside and played all the way down up until the entry point that we actually had originally, roughly at about 325 and 10 cents. Exited our position here, and I was done for the day. No more trading at that point. Everything was smooth, but our entries and exits were already calculated prior to us actually getting into the move. Things worked out well. Great opportunities on both sides to make some money on both ends, and all the indicators lined up. The confluence was there, which gave us the confidence in order to enter the play profitably and exit the play with money in our pockets. And that's basically what it's all about, is making the outcome income every single time. So follow the rules, follow the steps. You can make income like this on a regular basis. Today wound up being roughly about a $500 a day in profit. Not a huge win, but a win nonetheless. And these things stack up over time. So manage your risk as you go through. Trim your contracts if you're going to be purchasing contracts on a regular basis. Get a couple of them, trim them out, make sure you manage your risk. And this is basically what it's all about. Posted all these plays on Twitter earlier on. If you're following me on Twitter, hopefully you were able to catch some of these moves. If not, my link is in the description below. Go ahead and follow the Twitter page. I post a lot of high quality plays there. And I'm also starting to do a little bit of live streaming as well. So if you'd like to join us on the live stream, I'll be on Twitch. I'll also leave my Twitch handle at the bottom. Please go ahead and like and subscribe to the video, and hope to talk to you guys on the next one. All right, so that pretty much wraps up the video, and I want to know what you guys think. Leave your comments and questions down in the comment box below. And of course, if that button is still red, go ahead and click like, subscribe. Join us on the way up. We're going to be here every single day, growing our portfolios together and making the outcome income for 2023. Don't forget, leave your comments, like, subscribe, and we're going to see you on the next video.